On my channel, I do like to talk about high risk and high reward. It is absolutely true. If you risk a lot, you can gain a lot. If you risk a lot, you can lose a lot. I do find myself in the medium. I do believe that I take a lot of risk. However, they're very calculated. And I always put pillars up in order to shield myself from potential harm. Here's a few examples of high-risk situations that were failures in my own personal life. And then I'll give you some high-risk situations that were actually prosperous for me. So as you all know, I started investing when I was 18 years old, and this was in the stock market. So it was around 2015. When I started investing in the stock market, I took little risks. I had about 10,000 in savings. I put 2,000 in the stock market. And when I always talk about investing, this is money that you don't need that you invest. There was one of my friends who actually got me in the stock market, who told me about this cryptocurrency that just came out, this crypto exchange that had just came out. And this is before I truly understood Ponzi schemes and things of that nature. And so you already know what I'm getting at. A lot of people find, even in my earlier stages, found me as a very savvy investor, someone who was always making money. And so when I decided to take part in this crypto thing, I was looking at my friend. He was telling me how much money he was making and earning. And he said, hey, you can do the same. And then you can pull this out in about 20 years and just be a multi-millionaire. I was like, wow, it sounds amazing. Why not? And so I put, I think, $2,000 into that as well. Now, my brother also put $1,000 into that in his own account. And then this platform was called BitConnect. So a lot of you are probably already familiar with BitConnect and how it went down, and how it was basically a scheme. And so all that dividend, all that stuff that they claimed to be given to shareholders, that was all false. But because I'm a reputable person, because I am someone who holds his relationships at a high standard, I had to not only pay my brother back, but I had to eat my own losses, right? So I had to give my brother $1,000 that he had invested, and then I had to eat the loss of my 2,000 that I had put in. And then what would my friend say? Oh man, I'm sorry, right? Like, you know that he can't pay you back for that, but it was an investment that he had suggested for me that went up in smokes and flames. Here was another high-risk situation that I had partook in that ended up being to my detriment. Robinhood had came out with options trading. And starting off, I actually made $700 in an hour on some Apple stock going up in value. And it was just exhilarating. It was exciting. It felt like gambling, maybe because it is gambling. And I just was enamored by the fact that as I'm walking to class in 2019, I just made $700 in less than an hour off of some Apple stock going up in value. And you know what? I should have kept betting on it going up, because I started betting down, 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 and that's exactly what my money did. That money went down, down, down. I think there was a point where it was either $4,000 or $6,000 that was lost. I think it was $4,000. I can't even remember now. Have I made that money back in the stock market doing regular dividend investing techniques? Absolutely. But, that was a loss that I took on the chin, and I said I would never make those type of decisions again, to gamble, because that's what options trading is. In my opinion, it is gambling. You get that rush of making 700. You believe you can do it again and again and again. I believe 700 was the most that I've made options trading in a single hour. And I mean, it was exhilarating. Can you imagine making $700 an hour? It's it's life changing. So I decided to stay away from that. Have I ever options traded again? Yes, I have. I options traded one more time, and it was on something that I believed to be a no-brainer. So Robinhood IPO'd, the actual stock exchange that I lost a whole bunch of money on. And when they IPO'd, I put an options trade in that it would go up in value, and I think I made about $2,000 very, very quickly, like in the first day. After that, I sold all my options, and that was it. So did I make all my money back in Robinhood? No, but I definitely mitigated some of my losses there, and then I wrote the rest off in taxes. So that was one way of, essentially gambling, but just making the right bet. How did I mitigate my risk? So here was my idea when I did that options trade for Robinhood. It's on their own platform. Robinhood does not want the news and the headlines to show that the first day that they IPO'd, they were negative. They were in the negative. It was a failure, right? They want to show Robinhood was successful. Robinhood was able to do all the right investments and this and this and that. They're the best place to be. Wow, they went up 30% in their first day. That's what Robinhood wants as the headlines. And so me understanding that, I knew that for a platform like Robinhood, they could not have their stock in the red on their grand opening day. It just didn't make any sense. And so that's why I was able to do an options call and bet on it going up. Would I do that again? No, I would not. Would Robinhood IPO twice? No, it won't. It was just my understanding that it's on your platform. You can't have it down on the first day. And that made absolute sense to me. And that's exactly what happened. Now, here's some risks that I did take that were very, very successful. So a risk, educating myself. After educating myself in options trading, I knew that that was something that I should not do ever again. And I focused on dividend and growth investing. This paid off in the long run, where I now make well over $7,000 a year just with dividends and growth. And so that is a blessing in itself, right? So I now make way more than what I lost back in 2019. And then also, when I dumped all my money into real estate twice and literally leaving myself with less than $1,000 in my bank account, it was to maximize my monthly payment, which allowed me to get the best monthly payment that I could afford at the time, putting 10% down on both of my properties, which was all my money at the time. This was a huge risk because I didn't have an emergency fund, because I didn't have any savings whatsoever. Couldn't even afford a couch, right? And so it was just me taking those calculated risks and understanding that I'm young now and that you can only have this monthly payment once at this interest rate. I need to really take this huge risk for a huge reward, which is for the next 30 years, I have a mortgage that is as cheap as I could have possibly have made it. So I'm not too upset. Could I have lowered my interest rate a little bit by buying a few points? Sure, but that would have left me even more broke. I literally had maybe like $750. I would have had $200. And so I probably couldn't have afforded to risk just that little bit more, or else it would have been real bad. Maybe not being able to afford gas one week or something like that. So it never got that bad, thankfully. So I was able to afford gas. I was able to get around. I was able to get to work. And that allowed me to get a check-in, and eventually get that savings where it needed to be. So that was two huge risks that I took twice early in my real estate investing career. Would I do it again? Absolutely. Because I believe that the risk is worth it. But I'm coming to a point where There will be a time that I won't do that again, right? I won't risk my emergency fund being depleted. I won't risk my savings account being depleted for such a high risk, high reward leverage that has paid off twice. But if you do it 10 times, you'll eventually get burned. You understand that? And so I did that twice. I don't want to, my options are getting smaller and smaller, right? There's a 1 out of 8% chance that I will get burned. So you don't want to buy something. And when I mean burned, there may be a roof leak. There may be a sink that falls in. There may be a power outage. There may be a non-paying tenant as soon as they move in. All these things can happen to where you're now burned and you're out of capital because you spent it on all on the property to maximize the monthly payment. You don't want that to be you. But it worked out for the first two. I now have a huge savings, huge emergency fund, huge everything. And so, it's time to start being a little bit more safe and less risky. So it's going to lower the risk, but also lower the reward because the monthly payment might be a little bit higher, lowering my passive income. So if you like this video on high risk, high rewards, me talking about the stocks a little bit, me talking about listening to friends who maybe wasn't as knowledgeable, and me not doing my own research to understand, is this FDIC insured? Is this backed by the government in the US? Is this backed by blah, 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 blah? And understanding what safeguards my money and safeguards my investments, right? So even in the stock market, which is very, very risky, you can lose everything. At least it is backed by your government, is backed by the Fed. You understand that you're investing in something that isn't a scam or a Ponzi scheme. So those are the type of things that you need to be taking a look at and understand very deeply, that you're investing your money in something that America approves of, first and foremost. So if you like this video, make sure you leave a like, comment, and subscribe. You know I post every single day at 8 a.m. daily on YouTube and on Rumble, and I can't wait to see you on the next one. Peace.